Good morning. Let me know if you can hear me in YouTube land. Thank you, Dan Weldon. Appreciate it. All right, I'll be back in a minute after this disclaimer.
Risk disclosure statement. There is a risk of loss in trading stocks, ETFs, commodity futures, derivatives, options, forex, and cryptocurrencies. This risk can be substantial, and therefore investors should carefully consider financial stability prior to trading. Past performance does not indicate future performance. The software, strategies, chat rooms, websites, and associated with websites, digital and for educational purposes only, should not be considered as express or implied promise or guarantee to do not content that is limited in any whatsoever. Users of the information accept full responsibility for the outcomes of their deployment to Stops and Icebergs, LLC, and associated companies, agents, management, or customers for performance of representation. Please remain responsibly. Commodity futures trading conditions, CFTC, Rule 4.41, hypothetical and single trading performance results are certain inherent limitations, some of which are described herein. No representation is being made in account of BHT problems unless similar to those shown. In fact, there are frequently sharp differences between hypothetical estimated performance results and the actual results of the BHT by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit in hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading report can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or inherent to a particular trading program and stock trading losses material points to an also adversely affect actual trading results. Because these trades are not actually being estimated, the hypothetical results may not work or compensate for the impact, if any, of certain market factors such as lack of liquidity. There are numerous other factors related to markets in general or to implementation of a specific trading program which cannot fully account for in swing trading or in preparation of hypothetical performance results at all, of which adversely affect actual trading results.
All right, good morning. So I just took a couple beatings here on reversion trades. Today is big money's in here playing. Usually a day after the Fed, they come in and start to do their business. So this move down earlier was not, if you guys have been following at all what's been going on in these markets, the 0 date to expiration games have been just running the show, loading up the options dealers where they had to come into the futures and hedge themselves. So the move down, there was really nothing going on that was telling me bigger money was in. And then, of course, the thing just stops on a dime. And then the euro rips, $2 billion and, blows me out of these reversion trades. So I have different strategies we'll go over here. You can't predict the hero. You can when you get the flow alert, we'll look at that. But, it's not 100% either. Obviously, nothing in trading is 100%. But, you put the trades on and you hope you don't get a hero up your you-know-what. And that thing ripped $2 billion and it stopped me out. So I took a plus reversion, which are usually they're the best reversions. So we have different trades where I'll take position trades, and I miss a position trade here that we'll talk about. Of course, the big winner I missed, and then I put on the two losers per usual. But we play these reversions, so that's what these lines are on this chart. You got the 1 ATR, the 2 ATR, the 3 ATR. So the current ATR is 50 points. And actually, I had too many on. I'm just seeing that right now, too. So I had double size on, and that's double what I should have lost. So that's not good either. I had to step out of my office, and I kind of lost track of this. But the sizing was, I had too many on. But anyway, we play trades, position trades. We're looking for the bigger moves. And again, I missed this one. I'll go over that. And then we play reversion trades for these markets to come back to the volume event, which happens nonstop all the time. They're even better when you get these reversions into prior events, because there's traders that are trapped there and they want out when it comes back. Anyone's holding their breath to get out, and it usually does that pattern. Again, hero ripped and it just dragged this thing straight through all these. And then I took one off of the GEX level too as it bounced off here and then lost on that. Made one last push. I even moved it above these spot gamma levels here and it still stopped me out. At least it wasn't to the tick. That's enlightening for me. But did stop me out. This is probably going to be the high, and then it's probably going to come back. So, I did what I was supposed to do. I took the trades properly, but it's going to suck because it's going to come all the way back. I'd be willing to bet on it. Anyway, I missed the trade I did miss. So I stepped out of my office. Was this Izzy trade. So my whole trading methodology is looking for, in my important areas, looking for volume events and then trading the stop iceberg events and then trading off of the stop iceberg events. Well, that was that sell ice down there. It's called a broken ice event. So someone came in here selling, someone big, and they were wrong. So the event was right in this zone. You can see, ripped right out of there. So the other thing that bounced off of here, and I would have taken this if it did the retest confirm, was the old Ludwig level. You see how ridiculously powerful these things are. You will see throughout this webinar. Second most powerful thing I've ever seen in my trading career, next to the stop iceberg information. So bounce right off the lug there. You know, if this was buy ice, we have a strategy called the I lug U. Let me pull up these strategies here. So the I lug U, iceberg at the major lugs. The problem was this was sell ice. I'll still take this trade if it did the retest confirm and it just didn't come back to the zone. So, you know, I don't, if it was buy ice, I get in aggressively. So I have two different ways of entering these trades as well, position trades. Either first move out, that's the entry. So I wait for the market to move to show me if this is a bullish or bearish event by if it could push the ATR out of the zone, right? That's the current ATR. And then I get in just outside the ATR plus 15%, right? So that's where I will enter the trade. Well, there's certain trades or areas where I'll get in first move out of the zone, and because it may not come back because that area is so powerful. A lug is one of them, but this was sell ice at the lug, so I'll still take the I lug U, but I need to see ATR retest confirm. That's another method of entering these trades. It's you know, safer method, if you will. So anyway, I didn't have that to put on. I missed the Izzy trade, of course, 100 plus points straight up, and then I put on the two losers. So that's not a good start to the day, but I am currently long crude. So these are still working. So this was an Izzy as well. So stop run into the inflection zone here. So these are zones that I draw every day for myself in my trade room. You get them for free, part of my trade room. These are just where important things happen. Something happened way back here, but it was still relevant, so I kept it. You see how it bounced this last time too. So Izzy's are usually, you know, fade areas where I'll fade, you know, play the other way. This one was, I waited for a certain pattern, the ATR retest confirm that we just talked about, because this is breaking below all this balance. I was all ready to fire on the shorts, double size here, because this is the best trade in trading, the fail balance breakout, where it tried to break out, came back, got through the high volume node of that balance area. High volume node is just the middle of the balance area. Balance areas are just two-sided trades where traders are placing bets. When it gets through there, if I get an event, I'll take that short. But this is why I wait for the confirmation out of the zone, right? This event never proved short, so I didn't. Not only did I not put the short on, I actually put longs on. They felt terrible, and this is why I don't trade by feeling anymore. When I was a scalper, a big scalper, I trade. That's all I did was trade by feel. Nowadays, my feel is wrong 80% of the time, right? So just because these algos are, you know, meant to whipsaw everybody around. So I have no feel anymore. This trade felt terrible based on what I just showed you, but I still had my areas, and then I got the ATR retest confirmed, so I put on an Izzy strategy that I just showed you and a pick trade. And this is just a perfect example of trading your system and not what you feel. So again, these trades felt terrible. This was the other area that I got long on. So the market came into this prior market profile where you can see it's still important. It was important there. It was important here. It came in here. That was that stop run. So I took it as it moved back out of there. And I waited for the ATR retest, and this trade's working. So at least I got these puppies on, but I missed the Whopper position trade in NASDAQ. So another example of, again, that market looks very bearish overall. I mean, especially long term or bigger picture. Let's see here. See this major fail balance breakdown out of this guy, or fail balance breakout, I should say. You know, and then I did it again, and it's still fighting this major one, right? So this, and then it just did it again. So I mean, not that, you know, this could stall anywhere, but again, it looks terrible to be long, and I'm long because I follow my rules. So I will pay myself as this market moves higher. I got out of some, so and this is another thing I'll show you guys is this price change algo, which is pretty ridiculous in its own right, right? So I got in here, and then I got out of a couple here, and then when it price changed back down, I put them back on. So this is a way you can kind of scalp around your position. We'll go over that. You could scalp off this as well. It's just very labor intensive, but you're going to have times, like you can see every time this thing spikes, it reverses, right? But you're going to get times where price changes for, when the big money comes in, and when it's just the algos playing games like they're doing right now, it works like a charm. But when the big money comes in, this thing can price change forever, like you saw here in NASDAQ. This thing price changed all the way up this entire time. So you see here price change and just kept going and going and going and going. So that was their hero move. Of course, I told you this is coming right back to the zone after it has to make one more swipe up and stop me out. Now it's coming straight back to the zone. So it is what it is. I took 2 different reversions off of this and they both lost. So it sucks, but on to the next trade. And I missed this position trade. So if I was in this long, I would have been out of some of them. So I would have been on that long, that Izzy. I would have been out of some here as it struggled. Same place I put the reversion trade on, playing for that to come back. And then I definitely would have been out at these spot gamma levels. Not the full position, but I would have been out of most of them. So woulda, shoulda, coulda. Just showing you the trade so you guys can not make the same mistakes that I just made. I had to go downstairs and I put my reversion trade in with the stop, and I just didn't see the Izzy there, so that sucked. But anyway, you can see this is right back to the normal trade where the markets just follow ES and NQ, just follow the hero to the tick. So it's not the opposite, the other way around. This is not driving that. This is driving that. And you can see 2 billion move, 2 billion move. Here's your pullback. It's even doing the little stutters, right? It's unbelievable how this thing runs the show now. It's just what it is, but most of the time, right? Not every single time. Like this morning, the market sold off and this barely did anything. And then the 0 day to expiration game starts, and then they take control. So, there's other ways that we can, and this was another thing too that I've been talking about. So usually when you get the flow alert, that's a signal a huge options trade just fired off, and the market usually reverses. Well, when this thing levels out and starts to turn over, but you see it started to level out and the market did not turn over, and this even started to turn over and the market kind of spun in place and then kind of ripped up, continued to rip. We'll probably get another example of this. This isn't the best one. What it usually looks like is this. When this flat lines, that means somebody's absorbing that dealer flow, right? So you usually get this, and then hero will start to turn over, and then the market just spins in place. It's just telling you somebody's absorbing that huge option activity. So when it doesn't go with it, then when hero turns back up, the market rips off the page. So we've been seeing a lot of that lately too. I got a new strategy coming for that too. We don't have it. It's not an official strategy yet, but I've been seeing it nonstop. So that might be confusing to some of you. I'll go over it. I'm sure we'll get another hero alert and we'll go over it real time. I got to keep an eye on this crude so I don't miss exits as it hopefully rips higher here. There was some sell ice in ES. They had to combine these. So this is the zone drawing tool. Let me put this in the chat too. So this is a flip book with everything I'm using in my trading. We'll go over this as well. That's this guy here. Let me put this on YouTube. Anyway, this is, we'll go over this. These are just my courses that I teach, but this is the zone drawing tool. You get that on the Bookmap Marketplace. So it draws the event for you on the heat map. You have the basic, which just draws the zone and the ATR. The Pro gives you all the reversions lines and the position sizing, where you plug in your account size, and it tells you exactly how many you can put on for your risk. So I'm risking $500 on each one of these trades, right? So if I'm taking position trades, I could put on 0.3 micros right now based on that ATR, which is a 10 right in ES, which is highly elevated. And then you have the reversion sizing here for the 1, 2, or 3, where you play trades back to the zone, like this one right here that I did not take. So I'm playing back in black reversion. So back in black are waiting for it to bounce off something important, and then taking the backdoor reversions coming back. Right here. But you can take them aggressively too. So this is a great example of, I was waiting to see if it would bounce off of this Gex level, monthly Q Gex level, then I would have taken the 2 and the 1 back to the zone. Never got there, so I didn't put the trade. I wasn't able to put the trade on waiting for that. This is what I'm saying though. If you're waiting for that, you're gonna miss some reversions. And the other way to enter these are aggressively, where you get in when it tags it going into them, right? Those are called aggressive entries. And if you took the aggressives here, the 1 would have lost, but the 2 would have won. So it would have been a net winner. So this is what the thing that sucks about waiting for these back in blacks. It may not tag it, and then it comes back to the zone, and then that reversion play is done. I don't play it again. So once it did this, if it came back down here again, I wouldn't take it. So I wasn't able to catch that one. That was nice. And now this is, again, I judge these volume events by if the market could tag the ATR on either side of whatever way it tags the ATR. Well, this one tagged the ATR below and above, so this zone is dead to me. So I'm not going to trade it. I did combine these manually. So that's what I was getting at with the zone drawing tool. You can draw this stuff. It draws automatically if these events hit threshold, right? So my threshold for icebergs and ES is 700, right? So if doesn't hit 700 on an individual event, it won't draw the zone. So sometimes you got to draw them manually. I combined this 700 with this was like 500, so we had 1200 ice. I didn't do anything on this one, and this move down, but I combined these two, and that's how I drew the zone. So the zone drawing tool with the F keys, you can just draw. If you tag the F and then left click and then release, you see how you can draw your own zones there. So they do them automatically, but there's times you have to draw them on your own. So we'll probably do another one before the day's over. Now we're just chopping around with the hero. It's doing exactly what the hero is doing. Here you go. Here's your little blip up. Here's your blip up. So you have to have this information if you want to compete in these markets, right? I say it all the time. The stop iceberg information obviously is the most important for me that I've seen to trade off of. And then this options activity, you want to know where these GEX levels are, where these dealers are going to be hedging. Mentor Q is actually coming out next week, where they're going to have these intraday levels where they'll update intraday, because obviously there's options activity. These are based on the day before. They're still ridiculously powerful, but he's going to have those. We just did a webinar the other day. I'll post that on my YouTube channel as well. But go to Mentor Q. You can watch it on his just Google Mentor Q YouTube, and you can watch the webinar we did the other day. Anyway, he's going to have these where they update automatically. Based on the options flow today, just based on the QQQ, not on the NDX. So, or the SPY. So there's just extra levels that are occurring right now, right? So, but my point is, you need to have this information if you want to compete in these markets, and you need to know what's going on with the hero, flow alerts, and these GEX levels. Again, you don't know what you don't know. If you're profitable, that's great, but I'm telling you, you'd be way more profitable understanding that stuff, especially the stop iceberg information, like I say, nonstop, all day, every day. So those are the drivers of my trades. Gold is very quiet today as far as events. This thing's been nuts. Like right now, the ATR is 94. Last week it was like 150. Right, but I'm surprised we haven't gotten anything.
10 minutes time now at the bottom of the hour. See the release of the.
So this is close. So my threshold in gold, meaning tradable event, is 150. Probably could have combined these two at the time. So here, these are too far apart. 653. Maybe could have combined these. It doesn't matter now, but that was 170 total. That was in here. Buy stop run here. So I'll just wait for something concentrated, a volume event. But this you can catch some huge moves in this thing lately, obviously. But being short, we were short the other day, they work, but it's like being short is like pulling teeth in here, because every clown that missed this move up wants in now, right? Thinking, oh, this is a great deal on this pullback, right? So what I also say is, anytime you start to see markets like hit the mainstream, that like you're in a grocery store, you hear people talking about it, that's time to get the hell out, right? So this was up here, everything on Twitter or X or whatever, you're seeing it in the news about gold, and then the minute it hits mainstream, it's time to get out of the trade. So that's that. But again, being short this market is tough, because every down move is they're trying to play the bounce. So I'll still take shorts. It's just not a fun trade right now. So we are hitting an Izzy zone. So this is a, for example, I don't take these trades. These are my important areas. This is an important area. I have an Izzy zone here. So I draw these inflection zone. That's short. Izzy is short for inflection zones. And the 4 important areas of trading. So tops and bottoms of balance areas. Right, high volume nodes of balance areas. We talked about that. Just the middle of the balance area. And then directional conviction, meaning huge moves. This and gaps are. This is on a regular trading hours chart. So huge moves are directional conviction. Gaps are directional conviction. So it closed there and opened up down here. And then buying and selling tails are very important too. So see, these tails are instant rejection. Again, this is an hourly chart, so it's not really instant, but it's still telling you something. You can see these tails yesterday after the Fed, right? Both ways. The market didn't know what it wanted to do, but it came up here, put a tail, came down here, put a tail, and then today, here's another tail, right? So this market does not know what, I mean, obviously it's very bullish, but you know, whatever way this breaks out of here is going to be the next big move. Very, 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 very likely. So I'm hoping it's that way so I can watch the longs get killed, which I love. But I don't really have an opinion here, right? It's just a bunch of tails. So the next break of either one of these tail areas, that one or that one, is going to be a very good indication. The other thing you want to pay attention to, so this is spot gamma stuff. His commentary is invaluable. When he starts talking this way, you want to pay attention. I'm talking about Brent from Spot Gamma. So I'll read it here. He puts this out every morning. Futures are up. Trump Z meeting, however you pronounce his name, from after FOMC, round 1 of MAG earnings. So it was yesterday. The sleeve SPX just under the 6,900 pre-open, and the bulls. Wait, what was that? I cannot believe this thing was going to come all the way back after stopping me out. This is just really annoying. Again, I'm just thrilled it wasn't the tick, because that's you guys just would not believe. I mean, you believe it if you're in my trade room, because I bitch about it all the time, but I'm just so tickled that wasn't the exact tick. It was close to the exact tick, but it usually tags me to the exact price and then does that. And I'm literally on the brink of being put away into a rubber room. So, but regardless, this is going to come all the way back. I moved it as much as I could. I even moved my stop too, because I try not to stop out into these GEX levels, but it's like, so my stop was there. I'm like, well, I'll move it just above this concentrated area. I could have moved it all the way above these and up here, but that was risking another 30 points. I already had too much size on to begin with, so I didn't do that. And of course, if I did it, then this trade would be working. But again, you got to make decisions sometimes. Like, is it really worth? That's supposed to be my stop for the 3. It was actually over here at the time, right? I mean, I want to move it 50 points, 50 plus points. Like, no, I'll just take my medicine, and I did, and now it's coming all the way back to the zone like it always does. Anyway, bulls need to keep it over 69, or else the decay of expensive calls could bring the correction we're on alert for. He's been saying this yesterday as well. You got some stuff in copper, so I'm sure not many people are trading copper, but just a perfect example of it doesn't matter what market you're trading. With these volume events, it's volume events, right? Volume are traders placing bets, kind of concentrated areas of bets being made, right? So let's see, stop around copper here. You got some sell ice. So it's just good to see these other markets. It all works. I could take an A plus reversion here, it looks like. Same trader just got smoked on. I don't trade copper that often, but let's see. I could trade one big one here. All right, so we'll put an A plus reversion on here. So again, I'm playing for this is A plus because these markets, I've already showed you a couple reversions, and we're about to see one in NQ that I got stopped out of. So if your entry, again, you could take these aggressively. This is A plus, meaning the prior event. For me to be wrong, it's got to get through this entire event to stop me out. So that's an A plus reversion, where I'm kind of leaning on that to hold to come back to the zone. So we'll put that on and see how that goes. I don't trade copper that often, like I said, but this is a perfect example. Why do I not have permission to trade copper? That makes no sense. Let's see if I can trade micros. So this is live. These accounts are live. So I'm not sure why I'm not enabled. I know I put copper on before here. I don't know why I'm not enabled. Now I gotta email the brokerage firm and say what the hell's going on with copper. So regardless, that is 100% going to be a winner now, by the way, because I can't put it on. So we'll watch that. So I can bitch about that a little bit. All right, expensive calls can bring the correction we're on alert for. If SPY is under 6,900, they're wary of the soft underbelly of this market. He's been talking about this for days. Per yesterday's note. I'll read that here in a second. Again, when he starts to talk in certain terminology, you really want to pay attention because it usually happens, right? So that's his thesis of what's going to happen, bigger picture, based on the options activity. My thesis stuff is based on the structure stuff, right? So I was just showing you those tails in ES. It's the same here in NASDAQ. So, I base my stuff, and this is really no structure on this ridiculous move the last couple days. We're just straight up. But now, again, you got a tail there. That's why I drew that guy today. And then you got this tail. This is the Izzy trade I missed earlier. But bigger picture, these areas, the break is going to be the big move. Again, I'm hoping it goes down because I love watching the longs get their asses handed to them. But though when my thesis matches his, I trade even bigger. So let's see, correction alert for if SPX is under 1,600, then we're wary of the soft underbelly, right? So he's talking about SPX prices, not futures. Where is he is? So this is 6,900 up here, right? So he's basically saying, watch out below. Why is this not? Why is this not tracking? Here we go. There's your 6,900, right? So he's saying be wary of this. If we're below here, which we are, you see these GEX levels here too. So these are obviously correlated. Two different sites, spot gamma, method Q, but these all relate. So there's nothing for me to go short here yet. But if I get a short setup and we break those tails, I'm going to be trading bigger size shorts. Lack of price move is the interesting part here, particularly given that vols have come in 1 to 2 points versus yesterday. Below is the month SPX skew, teal versus yesterday, and the trending higher for most of the week. We also know bond yields are on the move higher post FOMC, which is of course interesting given the rate cut yesterday. Oh, and this is the other thing. So he talks about Captain Condor comes in here. So take a look at this. This market is very, very, very. We have a trade now. It's called a seek and destroy. He calls it seek and destroy, but we have it on the here. This is one of the newer trading strategies. So this is all part of my trading strategy, of course, too. So as I add these, and I actually have to put SAT in there. I haven't put it in there yet. You'll get an update or an email saying I updated the course. So that's a lifetime thing. So if you have the course, every time I add a strategy, and there's probably another 50 coming, right? You get an email and you get the new strategy. Anyway, this is the newest one, Seek and Destroy. Take any SI event in the direction of the 99th percentile GEX levels. I'll look at this here in a second on spot gamma trace. After 10 a.m., this is the game, right? This is when they really start to step on the gas with the games that we already saw this morning. Holding to that price or an opposing volume event, meaning this is way down here. So that's it's just starting to come off a little bit here. So these are still, this one's still 99%, this one's 98%. So the market just has, it will, just like when we see heavy resting liquidity in the market, well, I'll find some of those. The market tends to go to it. Same with this, right? So if we get, say we're just sitting up here and we get, after the next half hour, and if I get like a bearish event, I'm taking it and I will hold here. There was an awesome one. I think it wasn't yesterday, it was the day before. There's one in NASDAQ and in ES. So keep an eye on these levels. Again, this is 6,800 SPX. So that is another 50 points down here. So that would be, I would hold, like say this is, again, this event's dead to me because I take the ATR both ways, but say I get a bearish event, I would hold it all the way till we get down to that 6,800 level, or if I get an opposing event to turn bullish, right? So I will keep an eye out for that. I was ready to put that on. I missed the ones the other day that were awesome winners. Speaking of winners, this is actually working for me. So let's see if there's somewhere I can get out of some of these. Again, I'm not bullish crude at all. I will get out of some at this market profile composite, and that was the point of control from yesterday as well. Meaning, so these are just individual days, value areas, market profile, value areas where 70% of the trade occurred. I don't trade the value areas, tops and bottoms of single days, but I will merge them if they overlap, and that forms a composite, right? So like if it's 2 or more days, if they overlap, so you get the value area and then like the next day value area, well, combine them, and these are really powerful areas. So these are where I initiated this trade to begin with. If it gets up here and starts to struggle, I'm going to get out of probably half my position up here near 60.40. I should just put that in so I don't miss it if it pops up there. You know, if you're watching your market, you can judge when it gets up there, hey, because it might blow right through there. Actually, let's get tick strike going because that helps me judge as well. I just don't want to miss it. That's my MO as well. So those trades are working. Again, these longs felt terrible based on the and this market still may die, but you know, again, that was a failed balance breakout of that dude, and this market should have been killed, and it didn't. It's not yet. It hasn't recovered this balance area yet, but I was all ready to do double-sized shorts, and instead I followed my rules and went long, and the trades are working. So I need to stop talking about it, or I'm going to jinx it. See, the market camera in my office hears me talking about it, and then they sell it off in 20 ticks. So this is how I trade, right? There's nothing here for me to get out of this trade. I got out of some here. I put them back on in the price change game. We talked about that. Came back. I didn't get out of any again, so I just held it. Now it's like if this comes all the way back, it stops me out. Comes back, stops me out. There's nothing for me to get out here. The only way I'm going to get out of some is up here, and that's right where that market profile composite is. That's why I got that alert there. Or if I get a opposing event, meaning a bearish event coming in. So we'll keep an eye on that. Nothing is happening in equities after running me over and missing the long trade. So Nasdaq is just following the hero as usual. Every blip this market follows, and so does ES. It's nuts. There we go. There we go. Starting to turn back up. Turn back up. It's unbelievable. I mean, it mirrors this mark. The futures mirror this because these dealers are getting loaded up and they have to hedge with futures. So, again, this trade's like a market. I'm not saying you predict this, but when it moves notionally, this is why. And it doesn't really help much. I lost on those reversion trades because this thing went from 0 to 2 billion in minutes. That's great. Well, how do I defend against that? You don't really know. You just got to, take it on the chin. At least I know why I got run over. It doesn't help a lot of times, but there's days like, especially the upside, if this thing's sitting at like 5, 6, 7 billion, you don't want to be going short, because it just tends to, you got all this options activity and this thing, the hero is at 7 billion. It's very hard for the market to pull back. So keep an eye on that as well as far as, notional, but this came all the way back right now. All right, we finally got an event here in ES. I thought he said ES. Bookmap Bob. That's what we call him, the Bookmap voice. Yeah, it's ES. What's going on? We have an actual event? A webinar? That's nuts. That's not, first of all, that's not ES, so that might want to start over where it's really happening. All right, so this is a sexy Gexy. I'm going to take this. Hold on, I'll go over this trade. If it draws a damn zone so I can figure out my sizing here. Come on.
US House Speaker Johnson says no legal mechanism to use contingency funds to snap. So Speaker Johnson currently speaking to reports about the government shutdown.
All right. I missed it a little bit, but I was waiting for the zone to draw. So this is a sexy Gexy. What's a sexy Gexy? There's one of the few trades where I'll jump in smack dab in the middle of the zone, right? Because came up here, the Gex level with sell ice. So someone big is selling here. I know the dealers are hedging here as well. So I jumped in and I can trade bigger than my position sizing here because this is based on me getting in down here for my position trades. If I'm jumping in right near the zone, I could put on bigger size. So that's why I put on 6. So anyway, I jumped in basically, again, it ran away a little bit, of course, because I was waiting for the zone to draw. My stop's up here for this trade. And again, this sizing is based on the 10 ATR. So this takes away, this helps resolve so many reasons why the zone drawing tool, why traders fail, right? The number one reason traders fail is because they, well, one, don't have an edge, but if they do have an edge, they're trading too big for their account size, right? This alleviates that. So if you go into the zone drawing tool, you plug in your risk, right? So right now I'm risking, $425 per trade on these on this account, right? So you plugged it in, I just put 42.50 and I put 10%. I'm not risking 10% of my full account size. You should never do that. It should be about 2%, but based on my account size. So I have 10 different $20,000 accounts that I'm trading live. So I'm gonna get out of half of these. So the dealer reaction did come in, but the way I get out of half of these, or I get out of some of these, I'm looking for at least close to an ATR move, right? So I'll get out of half if we can get down there, and then I'll hold half for a bigger move because it is a volume event, like I hold my position trade. So that did spike down there about 5 points, but did not get out of anyone. Anyway, I have these different accounts I'm trading 20, and I still have the Apex accounts, and I'm using this trade copier too. I did a webinar. I'm gonna post this in YouTube. I forgot. I don't think I posted it in YouTube. I may have. It's this trade copier, right? ETP. We just did a webinar with them. So I have these accounts set up so I can trade on Apex, and it goes right. So the Apex are those, the trader funding accounts, which I highly recommend you use. If you're learning this stuff, don't trade your own money, but you can connect those, copy those trades to the live accounts. So I'm doing that, and then I'm trading for a trading firm, just one of these strategies where I copy from a live to a live. So that's what's going on with that thing. But it's ETP, that's the one I'm using. People use them in different ways, right? So people like to get like 20 of the Apex accounts, and then you're just highly leveraged. People use it that way as well. So I'm not using it like that. I'm just using it because I had so many, I'm trying to put on these position trades that would take me, 5 minutes to go over to Apex, put them on there, go to my live accounts. It cost me a lot of money to start when I started trading these live accounts. So I got them all copied now. So that has alleviated some of the issues. All right. So that the first thing I put on here was a sexy Gexy. So that's on. Now what are my other areas? One, I could take reversion trades potentially, depending on what this does. I could take the A+ reversion. That's the prior event, right? It's already traded both sides, so it's not as effective, right? The whole idea of an A+ reversion is you're looking for traders that want out when it comes back. Well, this thing already traded up and through it, so it's not really an A+ reversion. So I got to decide if I'm going to take that or not. Again, the picture perfect A+ reversion, and this is one that lost. Again, they don't always win. Nothing always wins. But this is how it's supposed to be drawn up, right? You get event, you get event. Your entry could be in front of the event or in it, as long as your stop's outside of it. So I took the one here, and the stop was outside, and I got stopped out of that. But that's what an A+, that's how it's supposed to look. Because you're leaning on guys that are caught that want out when it comes back. Well, this event already traded up and through both ATRs, so that these guys aren't, there's no one in here, again, this is all hypothetical stuff. It's not really hypothetical, but this is how you got to think about markets. Whoever was in here, long or short, it moved well outside the zone in ATR plus on both ways. So this is not that effective anymore for A+ versions, is what I'm getting at here. So let's see what other areas that I can potentially put on trades. Strategies. If you got questions, throw them in YouTube. All right, so there is no market profile composite. This was a single day. This was a single day. If today's ends up like that, I could merge all three of these. So when you get the first day and then the third day overlapping the value area, which this would be more than 50%, you can merge all three, and that would be a nice composite, but that has not happened yet, so I'm not doing that. We are at VWAP and yellow lug. I don't take trades off of yellow lug. I'll get out of some of my trade at yellow lug. But I don't put events in just because the yellow Ludwig level, lug for short, I say lug for short for Ludwig because I don't want to say Ludwig 85 times in a webinar. That's kind of like the median. So you get this choppy trade. I just stop out of that already. Oh, you know why? I just hit my limit because of I have a $1,500 loss limit, and because of this, so this is not the real stop for this trade. So that sucks. I can't put any trades on this right now because of my cell phone pulls limit. So you guys saw 2 weeks ago, I was trading Russell. I think it was the same trade. No, it was an A+ reversion, and I put 15 on, and I put 15 big ones on instead of micros, and the market just blipped up and stopped. I lost $1,500 on it, and then it came back and it was a winner, but I blew out the account. So now I can't trade on this account right now because I have self-imposed. So I'm trying to tell you guys, like when you're having a bad day, when things aren't working, you don't keep trading because you're going to have a day where you blow out your accounts if you do that. It's 100% guaranteed. You all heard my stories. I had 2 different days where I lost $800,000 in a day, back to back Fridays, like not back to back within a month's time, right? When my limit's supposed to be $100,000 back in the day, right? So the point is, you need to just say, this is self-imposed. So if I have $1,500 on this trading account, I can't trade on it anymore. I will move to another account for, I won't put on the Gexi here, but if we get the reversions, because I'm trading Gexi and reversions on this, but I will move to another account for the reversions just so I can show you guys. But these accounts are done, so that sucks. It's all because of this NASDAQ loser. But I am long crude, so let's concentrate on the good things. So you can see here, crude, they're buying it here. This is tick strike. So again, I got an alert up here. If it gets up here, that's the market profile composite and this Gex level. I'm going to get out of probably 3/4 of my position. All right, so new event. We have this event. Let's look at some position trading areas. So I was getting at nothing on lug, nothing market profile composite. Let's see if this is a potential Izzy short. Of course, lost my chart like I always do. Here it is. So if this were to hold, I could take an Izzy short, meaning market came up here. There's that sell ice. If this proves bearish, I can take a short. This is one of my important areas. This is a really, really, really ugly chart, by the way, with these tails, but this is in one of my areas, right? So I could take that short. So now I can't take shorts. Why? Because this is how I judge. This just tagged the ATR. That's the blue. That's that. This is now a bullish event, so the shorts are off the table. I didn't put a short on. I put the Gexi on, and I would have been close to stopped out of this anyway. It stopped out here because it was self-imposed. But regardless, this is not a short setup. It is now a potential long setup. So what longs could I put on here? I can't put on an Izzy long because it's moving into the inflection zone. What I can put on is a bark lick, and algo guy's crossing here too, by the way. So this is exponential moving average ribbon. I use it, and this needs to be increased. Something in Russell here too. Hold on. Because the algo guy, we have it at certain tick levels with a. Now everything's firing up at the same time. So here we go. So this is crude. This is right near that area. I'm going to get out of some right here. Come on. Get up there. There we go. I didn't even have to move it. I got filled on it. Remember I put it in earlier? So this is a good example of, I'm not going to be able to sit here and watch this, but you can try to gauge, especially if you're using tick strike or market pulse, the volume, pressure, and balance. We got lots of stuff firing off all of a sudden. Anyway, this is that area I said I'd be watching. Here is that alert. It's about to hit that, and that's that market profile composite. So I still have 3 left. So I put on like 12, and I have 3 left. So that's a good trade. At least we got a winner there. Or I did. All right, buy ice coming in here in Russell, a lot of it. And of course, it moves out of there immediately. Hold on. Nothing's going on, and then everything starts firing off. That's just the usual. Let's see if this is an area. This is an Izzy zone. All right, popped up here. So if this turns bearish, I can take a short in Russell. That's entry here with this sizing. I'm going to combine these 2 zones too because they were back to back, right? So this cuts off. I have it on reset mode, so it cuts off at the minute. That doesn't mean the iceberg cut off. It just cuts off and it came back in. So these are one and the same. So I combine them. All right, so I could take an Izzy short there. Put on 6. This is Russell. So just one of my accounts, I'm at my limit today, right? These other accounts are perfectly fine. I can trade any of these other accounts. That's why I do it. If I Sexy Gexy account is and the reversion account is blown out for the day. Again, when things aren't working, they're not working. That's why this is all I preach to you guys. Is your P&L most days is going to look like that, and then you have the big day, and then it goes back to just small wins, small losses, small win, and then you have the other big day. You never have the losing day like that because you cut yourself off. So that's the most important thing you can do in your trading. I'm probably gonna be tempted to put on a reversion trade. Again, I'm trading the Gexy and the reversion on the heat map there, but I may put on reversions. We'll see. All right, so speaking of reversions, this was one. This was an aggressive entry. I didn't take this obviously because it was an easy winner. I don't like easy winners. I like the trades that blow me out and run 200 points in my face. But there's your ATR, back to the zone, you're out. So this is the closest thing to a scalp. So many traders want to scalp because it's against human nature to sit in trades and be tortured. So people love to get in and out. Well, this is the best way to scalp, and that's all I used to do is scalp off this thing. That is a no-no now. It's almost impossible because of the algos. This is the best scalp that I know of. And you can scalp the price change too, but again, there's times the thing will price change for hundreds of points. All right, let me get out. I'm gonna get out of one more here. This was a good trade. So all right, I got 2 left. If it keeps going, I still have some on. What I usually do now is I piece out it as the market makes money available to me in my important areas. So that was at Gex level. You got actually this is a dad short too. If this turns into a bearish event, we'll go over this trading strategy. So anyway, we're at a bunch of different levels. So this is where I got out of most of my long. We were here, your extreme standard deviation and VWAP, where these algos love to snap it back, and you have this Gex level. If it keeps going, I try to hold a portion to the other major lug, right? So you can see they're still buying this thing. So I'll hold it now to this, or if this event turns bearish, that just fired off. And if this event turns bearish, that already turned bullish. No, it didn't. Did it turn bullish? Yeah, so you can't see it because of the Gex level. This is a bullish event, so it doesn't matter. But I do trail my stop to the I'm not going to go short is what I'm saying off this, but I'll trail my stop to this most recent event. So if it does come back here before it tags the lug, I'll get out in 60.13. These were good trades. I put them in my room too. My exact words were, oh, my room's telling me something. I must have missed something. I think I've event and fire off. We'll look at it in a second. But my exact words this morning, I was ready to take a short. Where's it at? Potential FBB short, fail balance breakout. And then I said, here we go. Long, CL, Izzy, and pick. Feels like a loser based on thesis, but rules are rules. And I put the longs on and they were winners, right? That's why I don't trade off of what I feel anymore, because it's wrong 80% of the time. And I have some of the most extensive market I can't think of the word, right? From watching millions and millions and millions of contracts, like I have, my feel should be up there with the best, and I don't even have any feel anymore because these algos just run the show. So this longs felt terrible. I still put them on. Very nice winners. I could take a reversion here too if this, but here this is a disqualifier for one of. So this is one of the things I talk about in this course, right? So I have courses for the position trading. Those are the strategies. This is the main course based off the iceberg events, right? The 6 distinct iceberg events. Then these are the areas that I look for the iceberg events. Those are the trading strategies. And then we have the reversion course. So one of the disqualifiers for these reversion trades, it still may work, but I don't take them when they are against heavy relative volume. Right, so you can see here, where are we at? Oh, right here, right? So here is the event. Look at that relative volume coming in. That means big money is plowing in here. I don't want to hope it comes back. The algos play their game and snap it back to the event with this big money coming in. What was that? Oh, I just filled on, I filled on the Izzy short here in Russell. I sure hope I didn't get swiped into that thing. 69 I got filled. Yeah, I got filled at the right spot. So this was that and the inflection though, and I forgot to see if there's other stuff here. Let's see other things I could put on here. Short. Where are we at? Bounce off yellow lug, but I don't have a trade. There was nothing market profile composite, nothing lug. Oh, the other thing I could put on here. CO. So this is going to retest, but I just don't take those reversions on the on that every relative volume. So if I here I got stopped out of this Skexy, this would be a winner right now. Sucks for me, right? Because I hit my account limit and never stopped out. So you'd still be in this trade if you took it. So that sucks. Not that I want you guys to get stopped out, because I'm sure some of my members took this, but it would have made me feel better if I would have been stopped out. I'm like, oh yeah, I saved some money. No, instead it's going to cost me money. And you can see what's this heading to. The other game. This is the big money. They will get their fills. Doesn't mean it's going to happen right this second, but you can bet you know what, that stuff will get filled because they are the big money and they will push their orders to this activity. How do I know that? Because that's the game I used to play. I used to load up the order book. This was my main game. And then I would start to test the waters. I'd sell some, see if anybody reacted. And then I would just step on the gas. The market would cascade into my orders, right? I'd sell, buy, and then I'd be out of the trade and there'd be a vacuum, right? That's the game still going on. That's why everything that I teach you guys is based on my experience as a large scalper and how I would react when I was wrong and how others would react. Because you can see counterparty back then when who you were trading with. So that's what I want to say. Hey, by the way, there you go. How was this? Stopped out and all the way back to the zone. Surprise, surprise. I wonder if the hero's driving this. There you go. Every single day, all day long. Right there. Went from 1.8 billion to 500 million, so over a billion move. That's what he says is, notionally a big move. Dragged the ES down. 20 points, 20 plus points. And remember, this trade, we're getting into that area, seek and destroy trade. This market is highly, highly likely, probability-wise, to get down to this stuff. Well, it's coming off now. So, again, it needs to be here. If it comes off, then that's not the trade. So you want to see 99 percentile or more. It's coming off now. But, if this they could put it back on, too. This updates every 10 minutes is the problem. The hero is instant. This is every 10 minutes. So a lot of times what we've been seeing lately is you'll be up here, there'll be some up here, right? And the market will be spinning around at it, and then it comes off, and then the market gets killed. So, but it's 10 minutes. So a lot of times you'll see it, and then the market does this, and then you'll see, oh, it came off. But I mean, that doesn't help. I'm hoping they come out with more real time. I don't know why it has to be delayed 10 minutes, but you do have the hero. So this is the hero here, this blue line. The same thing I'm showing you on this chart, right? That's this guy. So this is from spot game. That's why we're pulling back here. All right, so I do have Russell Izzy short on. I'm going to get my stop. So I entered there. My stop's all the way up here. That's how I trade it, right? Because this helps me the best I can avoid the whipsaw algos that you see in here, right? Putting in and pulling orders. So if I'm going to be wrong on this trade, I'm forced to come all the way back in ATR plus, get through the volume event where there's trapped traders, and push another ATR. Then I say uncle, and my sizing is all based on that. So I have 6 micros on right now. Izzy short. And Russell, let's see some of the areas that I will potentially get out. There's really nothing here, until all the way down here is where I'll get out of this trade. I mean, GEX levels are some areas. We'll look at that here in a second. But got blue lug. That's about it. And the bottom of this guy. So I will hold this for that. Or an opposing value event that turns bullish. Then I'll get out. or Gex levels. So if it gets down this HVL, these are areas there I get out. So if this gets down here and it struggles, I'll get out of some here. That's a decent trade. And then I'll watch that and I'll watch that. Other than that, I'm holding a portion to the major lug, kind of like I'm doing with these crude longs that I still have on. Right. All right, see if you guys got any questions. No questions. Throw them in YouTube if you got them, guys. What do you guys? So I guess I missed an event in the ES. Let's see here. That didn't draw for me. That is because my room members were telling me. I don't see anything here. This was huge sell ice, by the way. Which sucks. I can't. I would have gone short this. I was short Gexy and I got stopped out. I shouldn't have been, but I hit my limit. This is a lot of sell ice, but it proved to be tagged the ATR to the tick as usual, right? So it hasn't tagged the ATR the other way, so I could still potentially go along this trade if it comes back. Because you got the ATR, the retest. So this is the if algo guy is in my direction, right? So algo guy is that exponential moving average. The bark and the lick trade, which are one and the same. So what is bark and lick? Bark is just the acronym is blind ATR retest confirm. Blind meaning it can happen anywhere. It doesn't have to be an important area like we've been talking about this entire webinar, like the IZZs and the picks and the slugs or the I lug you. This means because I want to take advantage of the volume event regardless, because there's the edges in the volume event. But for this, I demand the volume event, an ATR, a retest of the zone, and then confirm back out. That's what B is for blind, meaning it can happen anyway. A is for tags the ATR. R is for the retest. C is for the confirm. So that's how I trade it. The only thing I need is algo guy in my direction. So algo guy is exponential moving average. Of course, I lost it. Let's pull it up here. It just helps the trade. It's just a stronger, if you're going against algo guy, you have some, it's like pulling teeth sometimes, right? So it's just pulling bearish now. So if it got back up to that entry point on that sell ice that we saw, this would be pulling back long and I could take longs. So if that pulls back, I will take bark long as long as it doesn't tag the ATR below. If it tags the ATR below, there's no, I can't do anything because I already tagged bullish. But if it tags this way, then this one's dead just like that one died, right? But as long as it doesn't tag the ATR, I can still take this long. That's my entry. So that is at 1275, and I could put on 0.3 based on the volatility. Let me get this stop in a Russell before I get smoked on this. Just waiting for some news headline to hit the. So here's a great example of yet another. This was the 2. This is not a. I guess that these aren't levels. I learned that after about 2 years. The white ones are levels. Anyway, there was nothing for me. If it would have bounced off the HVL, I could have taken the reversion trade back. But here it comes, right? I don't want to say every time, but this is why we have this trade. Here's the 1. Here's the 2. If you're taking them aggressively, you filled on both of them. I think you got filled on that. Even if you didn't, you got the 1 back to the zone. Reversion, reversion, reversion. It's a little ridiculous how often it happens. That's why we trade it. There's your retest. All right, I stopped for the shorts up here. So what I have been doing is playing the price change game, which I should have done with this one, and I could be getting. I put on full size just because it's hard for me to monitor this when I'm on these webinars. But see how that was price changing. No, that wasn't quite into my. There was a little bit there into my entry. But I will put on half size and then I'll wait for the price change the other way and then put on the rest. Obviously, it gives me that much more less risk putting on and waiting for the price change. I've been burned many times lately playing the price change game where I'm like, oh, I'll only put on half and I'll wait for the price change the other way and put on the half. And then it goes like this. I only have half size on. So you got to be okay with that happening. But most of the time it does this. That's why we trade it. All right, so this is a sweet bounce in my face. 25.11.17 is my stop. All right, that's in. All right, so this finally did retest, by the way, to the tick. Surprise, surprise. I mean, it amazes me. I've been trading these things for 8 years. It is unbelievable, these prices. It's unbelievable. Unbelievable. Look at that. That is the exact tick retest of the zone. Algo guy is not bullish though here. I have it on a 50 ticker too because of the volatility. Yeah, the volatility is still 52. So this, things moving around. I can't take barking licks is what I'm saying here. And I missed this Izzy earlier. That sucks because that was a 100+ point winner. Like I've talked about this entire webinar. All right, I still don't know what I missed in ES there. What you guys are showing me. I don't even see a stop run in here. Like what were you guys like? They're trying to. I'm talking my trade room. Let's see. I did not get this stop run. 1375. Where do you guys see? I mean, you got to remember too, like when this makes everything smaller, when you get this whopper sell ice here. But I don't have that at all, guys. So I don't know what that was. But you guys got it. What was the size that you got there? Even when I expand this, I'm not seeing any stop run up here. Well, I guess this was nowhere near threshold though. So I have no idea what you guys are trading off of there because it didn't happen on my Bookmap. All right. So again, I could still go long here if this comes back here. 1275 bar click, which I will do.
Order canceled.
All right, that's working. Again, and you want to be careful putting on trades. I say it every single day. I've lost millions and millions of dollars in my career this time period, between about 10:15 to 12 Central, 12:30 Central actually. You'd be so much better off and a happier trader not trading during that time period. And I'm talking every market. It's brutal. You'll get, I'm okay trading if I'm seeing 150% or more relative volume in that time period. But other than that, it's just not worth your P&L. It's not worth anything. Especially you sit there and you put on a trade and you get whipsawed for 3 hours. And then when the trade eventually picks up in the afternoon, which it hasn't been lately, but when it does, and you're just brain dead because you're just like watching this nonsense for hours. So this relative volume is dying down. So I'm just showing you where I would enter that barking lick. I'm probably not going to take that bark lick in ES just because there's no relative volume in here right now. And again, it's just not worth you can see it's all dying down now. So I do have Russell on. I put that on before the time period, but I'm probably not going to put on this barking lick in long in ES just because I'm not going to sit here and watch it for 3 hours, snap around. So I'll give it, if I fill it before 10 or 8:15, 10:15 Central, then I'll take it. Other than that, I will delete that order because I'm just not going to sit here and watch that. You guys, 5:50 stops at 10 o'clock Eastern. That was 8 o'clock. I don't have that. I have nothing. Nada. I'm definitely going to send that to the Bookmap developers because that's sometimes it's just a little less than threshold. So I have like 400 and other guys will have 500. I have nothing. So that makes no sense. So I will send that to the developers when we get off the webinar. But this is what I want from my trade room is posting this stuff like we're own little trading firm. Everyone's sharing their ideas and showing. By the way, crude continues to rep along that at least. But this is what I want. So this is what you should be doing for yourself anyway. So the more you post in here and showing what you're seeing, this is the teacher's pet. This is a mini me Dune Runner, and he's doing very well, right? The more you participate, the better you're going to do. So Zosman participating, CT participates, but the point is get in here and participate. And that leads me to the Bookmap blue jacket thingy, right? So share your screenshots of your trading strategies or your trades on X, Instagram, or LinkedIn with the hashtag #FreeBlueJacket, and you can win subscriptions to Bookmap. So make sure you do that, and it's just going to make you a better trader anyway by posting your trades. And then in my room, it gives you some accountability too, because if something's wrong, Not that you're going to be berated. People are going to be like, no, that's not, you're doing that wrong. That's what you want. You want feedback, guys. All Dr. Brett in Twitter, or I keep calling it Twitter, whatever. Dr. Brett is the one, he's probably the top trading psychiatrist on the planet, and he's the one who wrote Enhancing Trader Performance, and I'm in that book because he sat behind me for 6 months ish to see what may be great. But all he talks about is trading in a group, how you do so much better when you have, let's see if he has it in here. I was reading something this morning, I think that's what. First, if you hope to return to trading after trying to blow up, you will return in a new way, in a safe way. This means beginning afresh and training and mentoring. Exploring markets, but many times traders blow up because they put their capital at risk without the proper training and guidance. That's what I'm trying to give you guys. They have not learned from mentors, so they don't possess edges. That's what I'm showing you guys, the best edge that I've ever seen in futures trading. Once you get the training and mentoring to trade in new and promising ways, it's important to begin trading in simulation mode. So this is kind of like the Apex stuff that I'm telling you too, right? So these are the best way. You guys don't know how lucky you are to have something like this. There was nothing like this. So when I got knocked out of the game, 2013-ish, there was one company and they were not interested in funding traders. They're just interested in taking your cash to get funded, in my opinion. Anyway, that's the one I use. I've been paid many times by him. Guys in my room have been paid by him. If you get it, Pulcini 50, that's my affiliate code. That is your thank you for me showing you the best edge that's ever existed. But the point is, you can get these for a fraction of the cost, and so you're not really risking $5,000 accounts or $10,000 accounts, right? You're just risking, again, you just got to understand how these things work. Most people do now, but you know, if I'm trading the 150, it's not 150, first of all. It's this is the account, because that's how much I can lose. It's $5,000. So you got to make $9,000 before you lose 5. And then it's a trailing stop too. So you can get up to 8,800 and pull back $5,000. You're still up 3,800 and you're out of the account. That's the drawback on them, but the good outweighs the bad times 10, because you can get these for a fraction. Like they're 80% sales now. So you can get them for like 30, 40 bucks and trade normally. And if you do well, you're funded. And if you don't, you lose 40 bucks versus 5,000 or 6,000. So, you know, you're learning my system or any system. Highly recommended you get this. And I use the Rhythmic and I have a couple of the Trade Ovates. But this is what I was telling you. I had the trade copier set up to my accounts here, all my trading strategies, right? That's all these. So I took the best 10 that I thought right now, because I just have the 10 live ones, right? But I want to cover that. I'm not sure if that matters, but so these are the Apex accounts that copy to these live accounts, right? So you can do that. You can trade these on, you know, obviously on your own by themselves to practice with. Not a game, practice. Anyway, he always talks about in here as like trading in a group. Those are the people, the traders that make it, not the secret squirrels. So if you come in my room, I can't tell you how many guys come in and leave. They don't participate. They say they don't get it. They don't understand it. And they don't participate at all. You're not going to make it just doing what you've always done. So get in there and participate and you will learn. Anyway, you can go to his blog. He talks about them all. And that's all he talks about, because he's like SMB, all those guys. They have this one big desk and they're all trading together and sharing ideas and everything else. So highly recommended. All right. So this trade is, again, the reversion worked. I didn't put that on because that was the winner. And I have my Izzy short on. So this is, you know, if I'm going to be wrong, I'm forcing them to come all the way up here to stop me out. Other than that, they can play their games for 5 hours. I don't care. I'm in this trade. I had one of these on the other day in gold. It did exactly this and kind of came all the way back and then just sat there for like 3 hours. And then at the end of the day, it got smushed. So I don't know what's going to happen next. I know I put my strategy on correctly. I know I have an edge. That's all. You just rinse. What is it? Wash, rinse, repeat. So that's what I'm doing. All right. So these, let's see where this lug is in crude. I'm still long a couple of these puppies. Hopefully my room put this on, because I did tell them really close to the lug here, like really close. Again, this market still looks bearish overall, right? I mean, it got back through here. So this is another thing that I look for too, right? If something happens that should do something, that should have been killed. That's why I said this morning I was ready to take double-sized shorts. That didn't happen, and then it did that. That tells me that's going to happen, or at least some form of that, right? This is the next one to watch. But for this not to die and to do what it's doing, it's telling me there's something underlying that's going to, this market should rip, right? Based on something that didn't happen. This thing should have been smoked. Then it got back through this balance area. So it's if then scenarios, right? You're ready to pivot on on my thesis. That should have been killed. I took the longs like I should have. Now I probably will take double-sized longs based on what happened there, right? Again, a thesis is just a guess of what I think is happening based on structure, and it's a guess. And I just trade, if it matches the volume event, which is the most important thing, then I trade double size. So that's all I'm doing there. All right, so these markets have just done absolutely nothing since we've been on here, basically. I mean, they're moving. Don't get me wrong, this is a 20-point move in ES, but it's like there's nothing. I still have my long working here. Getting real close to this time that I don't really want to put on any trades, though, because I'm so sick of watching trades for 5 hours, 4 hours in the middle of the day. Let's see if you guys got any questions. Banana. Do you the ICE to see if traders are trapped? Because price seems to move opposite of ICE most time. Well, it depends. I mean, the icebergs are big money, right? They got to pay more to trade icebergs. Why do they trade icebergs? Because they don't want to put big size in these markets. That's why the order book looks so pathetic, right? Because if I come in here right now and I put 1,000 lot, like this was 2,500 sell ice, which is a ton, right? It doesn't mean they're always right either. As you're seeing, the market didn't really react yet. But the point is, if they were to come in here and put 20, look at the size in here. If they put 2,500 in to sell, visible order book, these algos would do that. And then they have to chase the order. That's why they use icebergs to hide their orders. So they only have to show a certain percentage. So they have to put, if they want to sell here, the order book, it would look like, I think it's 10% now, 250 lot, right? And then as they buy into it, the rest of it triggers the other, 2,200 behind it, 2,250 behind it or whatever. Then it shows. That's what you're seeing on these icebergs. So that's why they use icebergs. So the big money are the traders that are using the icebergs because they have to hide big orders. It's not. I mean, you can use icebergs as a retail trader, but why would you if you're trading 10 lots? Like you don't need to hide a 10 lot, and it costs more money to put them on through the exchange. So anyway, it doesn't always move opposite, right? And it doesn't. This is one of the fallacies too. When I first started seeing this stuff, this was like 8 years ago. They're like competitors, or trying to be competitors of Bookmap, that were like thinking I was saying every time you see sell ice, you just sell. It's not the case, right? That's why we have the ATR. They're right. The big money's right more often than they're wrong because they're the big money. If someone keeps putting in 2,000 icebergs in here, the market will relent. Make no mistake, right? But this was 2,500 and it didn't do much. And now these guys, they just pick. It doesn't mean they're initiating positions all the time too. You never know what they're going to do. So stop trying to figure out what they're doing, right? Are they getting out of longs? Are they hedging options? I don't know. I don't care. It is worthless to sit there and waste your mental energy thinking about why they're doing what they're doing. Just know it's here, know how it should react. And that's what I teach. That's my method of trading. And when it gets the ATR out, then it tells you which way it's likely to go. And that's the edge, right? You're never going to know what these traders are doing. Stop wasting your time trying to figure it out. Unless you're sitting next to the guy that's putting on the size, you're not going to know. Or you're God Almighty. And if you're God Almighty, I'd like to meet you. All right, still in this Russell. Here we go with the whipsaw, right? So this is why I put my stops. I say it every day. It's why I put them where I put them, right? To avoid that nonsense. How many traders, and again, these webinars are not for you to be mirroring my trades. It's to learn how to fish for yourself, right? That's why I have the trade room and the courses and everything else. But how many traders put this on with me and are like, oh my God, I'm out, right? You get out right here and then the market does that. And you're like, well, this is what traders do nonstop, right? So this is why I put my stop where I put my stop. It's from experience. I don't like risking. You think I like risking that? No, but I have to because I've traded so many of these. I know that's the best method to stay in these trades. It sucks, right? And I know it erodes your R, whatever. R doesn't mean crap if you're getting stopped out all the time on whipsaws. So this is all based on entering here, exiting here. and then I'd let the trade work. We do have the few trades that I put on, again, right in the middle of the zone, the sexy Gexies, and there's a couple other ones, but most of the trades I'm waiting for the ATR to move out of the zone. And this is coming back on, by the way. This is almost 99%. That's 99%. Seek and destroy trade is still potentially there. But these are my auto entry trades here. Auto fade, I call them. TikTok, when you get a tick extreme with an opposing volume event, those don't happen all the time, but they are pretty golden because you already have these traders and algos that play this extreme, right? So when this thing tags the extreme, it rips back to zero. It doesn't always happen instantly, but it will eventually revert. So when this thing does hit extreme, so extreme is right around 1,000 for the NYSE and NASDAQ. So when it hits extreme, it pops back. So all these traders jump in on the tick, playing the tick game. So I will do it only if I get an opposing volume event, right? So if say it was a negative tick reading, extreme, if I got buy ice, I would jump in right in the middle of the zone, or sell stops, right? Because sell stops are usually, or stop runs are usually retail traders puking out positions. Hero down in SPX divergence there. Yeah, you got to be careful watching these little blips. Like I don't see, if it's a notional divergence, then yeah, but I don't see what you're saying. This market's doing exactly. I'm talking to Sergio. This market's doing exactly what the hero is doing, like to the tick, right? These little blips don't. I mean, yeah, the market's reacting to them, but I don't like if this were to move 2 billion and the market just sat here. That's telling you something, or even 1 billion. This thing's just bouncing around. And this, again, the ES and NQ do exactly what this thing does most of the time. Not all the time. When the big money comes in, then it's a different story. But most of the time, it's the options dealers in here and the algos. You can see the algos playing games. And I'm gonna end up entering this damn trade, and I don't want to do it this time of day. I mean, look at this. It's the same exact. It's a mirror image. That's that, and then it did this, and it did that, and now it's doing that, did that, and that did that. So again, I don't look for divergences unless I'm seeing 1, 2, 3 billion moves and the market's doing nothing. And I still don't even have a trade strategy for that yet. It's coming, but I'm not even trading that yet. Who else? Where's the divergence, Sergio? It's not moving notionally that big. Where's the divergence? This market just went here. We'll even look at the times. Let's see. This was at so this is 9:54, 10:54 Central or Eastern. Right there, 10:54. It even did the blip right there. Look, here's 10:54. Here's 10:54, and then did that. And then it did this and this and this and this, and now it's doing that. Where do you see a divergence? There's no divergence here that I see. Again, if you think you got a strategy there, great. I'm not saying there's, you can't trade the little mini divergences, but I'm not seeing anything worthwhile, any divergence. Plus, I don't have a trade strategy on it anyway. But I'm just trying to show you guys, you need to have that information to know, especially when you get the hero alerts and then the trace indicator. Right, this thing is so important. Knowing that's all we didn't even finish reading this. This is all he talks about it. How the markets get drawn to this, and this is real time. You need to know where these levels are, and that's in the flip book too. So let's just go through the rest of this quickly. Where's that here? So if you go, that's the Apex. Use Pulcini 50. Here's Bookmap. Click on that. You get a discount to the basic software. You need the MBO add-on to get the MBO bundle to get the SI information. I guess they have an SI indicator only where you don't get the MBO. I recommend the MBO bundle because then you get the price, you get market pulse, right? The price change algo and the volume pressure imbalance, the stuff that I use. But you can get the Stop Iceberg indicator on its own for a little cheaper through the Bookmap marketplace here. Let's look at it. I didn't even know they had this until very recently, that you can get it individually. So I just do stop and see if it comes up. I don't see where it's at. Here's my courses on here too, by the way. I'm not seeing that indicator in there though, but it's in here somewhere. But the point is, you can get it on its own without the MBO. But I recommend the MBO because then you get the market pulse, which is awesome in its own right. Here's your discounts too. So method Q, get 20% off yearly or monthly. For those are all the Gex levels on here, and he's got a bunch more. Watch the webinar I just did with him the other day. He talks about all the other stuff he's got. Spot Gamma, use the code Scott, you get 50% off your first month. And they got all these new tools coming out. I've been sending out emails about it. I think they're presenting, is it today or tomorrow? I have access to them, but I'm not using them right now. So you can see I'm not even on the staging because there was something wrong with the thing. But I don't even know how to use them, so I got to watch the webinar too. But they got a bunch of new stuff coming out. So, because I mean, on top of everything that they already have, it's incredible. Other than that, yeah, well, you're looking at here in this capacity. Yeah, I mean, it's sitting here in markets. I guess I'm just not seeing what you're seeing, Sergio. Good. I'm not saying it's not valid. Just like I'm not telling you guys what areas you deem important in your trading. What I'm telling you is, I don't care what you're using. This is going to suck if this doesn't get up to this lug and I still have this thing on. I trail my stop though. But what I'm saying is, these are my areas. That's what I teach. You may have completely different areas. Fine. Demand volume events in those areas, and your trade is going to be that much more powerful edgewise, is what I'm telling you, and the rules around it. All right. Anything else here? There's markets have just been completely dead, guys, this whole webinar. So I got smoked on those reversions right away, and then of course it came back to the zone, to the tick, and then nothing has gone on, and it's just playing algo games now. Algo and hero games, as usual. So I do have the bark and lick working here. I'm telling you, you would be much happier in life if you don't trade during this time period. 10:15 to 12:30 Central. But this is the pattern for the bark lick trade. Bark and lick are the same trade. The lick is just you're holding it to the heavy resting liquidity. I wouldn't be holding to that because the entry's right here. Let's see if there's any above here. And remember, you still got all this down here too, right? So if we get a bearish event, an algo guy's bearish, bark and lick, watch that because that's very, 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 very likely to get filled. I'm not seeing a bunch of lick above here. Again, you know, if you don't like all these lines, you can turn these off for the zone drawing tool. These are just the entries. The dotted lines are the entries for the reversions, and then the dash dotted, the red, are the stops for those reversions, right? So if I put on the 1 ATR, my stop's there for the 1, the 2 is there, the 3 is there. And here's the percentages for the trade, for that trade. Jay Labrada, my room moderator, put these together a long time ago. Let's see here. Where are they at? There they are. So the 1 ATR, right? Again, over the long run, I think it's about a 70% trade. Well, you got to be 60% right on this one. You're risking 1.5 to make 1. That usually is not a winning proposition in trading, obviously, right? But for these trades, it is, because it's 70% or higher that it works. So you can do the math. If you want to take the 1s, if you don't, then take the 2. The 2 is you're risking 1.38 or 1 to make 1.38, so that's a little better. And then the 3 is risking, sorry, that's not the 3. 3 is here. 3 is risking 1 to make almost 2 to 1 on your trade. Well, you could be saying, you're probably saying, well, why would you just take the 3s? Well, because you may not get the 3, right? So on this one, if I'm waiting for the 3, I'm like, okay, I can't wait for my 2 to 1 on my trade here. I'm going to put that 3 on and watch it come back. Well, I already did it on the 1, so you're out of luck. So that's the point. Which ones work? Some days the 1s work nonstop. Some days the 1s get blown out and the 2s and 3s work. So that's why I like to do the back and black, where tag something and it comes back, right? But if you're taking them aggressively, if you're waiting for the 3, the 1 already did it, I'm done with it. I don't take the 3 after it already retested on the 1. You see what I'm saying? So yeah, you can wait just for 3s and you'll do great. You're just not going to get a bunch of them, right? The 1s happen all over the place. Like, let's see, I'm sure crude did this one. I think I missed a trade here in crude while we were on here. I did. This is a back in black right here. Again, these are areas, but you had two here. These were two big ones. Blind spot 1, that's the strongest blind spot, so it's based off the ETF. And then HVL went a little bit through it. Take the 1 back to the zone to the tick as usual, right? So they're just nonstop everywhere, guys. That's what I'm trying to tell you. But you got to be, if you're going to take them, you got to take every one of them to let the edge play out in your favor. There's one in wheat. Again, it doesn't matter what market you're looking at, that they're all over the place. All right. There's that. Let's see what else we got. Is there anything in silver today? No. Nothing in YM, I don't think. Nothing in bonds today. That's kind of odd after, especially. So usually the day after the Fed is when the big money starts to play in the markets. Like they don't usually put on a bunch of size right after the number, obviously, with Powell talking, but it's usually the day after. Here's copper. Copper's been very active today. And the other thing too is, so say I was put on these reversions here. If a new event comes in, I'm out. I don't care if it's winner or loser, in my favor or whatever. I'm out of the trade because it's a new event. Then you start the process all over again. And here you go. This one's going to be an A+. And I remember I tried to put on one earlier. I couldn't, for some reason, I can't put on copper. I got to call my trading firm here when I get off. But it's already coming back. That's an A+. So it doesn't matter what market you're trading is what I'm trying to tell you. All right, I'm pretty much at the time. You guys got any other questions? Euros close. Let's see what they want to do. How do you judge that, Serge? What are you going to do at the close? So Europe closes, and then what do? You just throw on a trade? Actually, that wasn't Sergio. It was Sir, S-E-R. So what do you do at the close? At the European close? What does that mean? Do you have a trade for that? Do you just throw on a trade based on the way the market's moving? I don't know what that means. I still would have never been stopped out of this Gexy, by the way. I mean, talk about a torture treatment. If you guys put this on in my room, they've been tortured. Well, actually, I would have been out of half there. That sucks, right? Remember, I stopped out of that because of my limit. But, I mean, this thing has done absolutely nothing since we've been on the webinar, except for bouncing around. But still you still wouldn't have been stopped out. And there's another thing, too. So say I did put this on. My stop was up here. If the stop contracts, wherever my stop is when I put on the trade, that's where it stays. I don't contract my stop. I'll change my entry price if I don't get filled for my position trades, but I don't trail my stops because I can't tell you how many times that it goes like this. And I'm like, oh, I'll save some money and then move it down. And it pops up, tags it exactly, and then does that. All right. So I leave my stops where I put them when I fill on the trade. So this sucks because, again, I hit my limit there, or I wouldn't have been stopped out, and I would have been out at half to the tick as usual. Even if I might not even have got filled here, then I'd be bitching about that. But you can see these prices are they're insane. They're insane. I can't say it enough. All right, that's all I got. Pretty dead day. Hopefully you learn a little bit, though, on how I'm doing this and the best edge in the history of position, or the history of futures trading, in my opinion, and how prevalent these options areas are. And again, watch for this. Very likely to come down. Well, it's coming off again, but keep an eye on this stuff because that's where the markets usually head. And this is filling in here too. So again, I'm not a trace expert. I'm just using the basic sense, but he talks about it on his webinars all the time. Seek and destroy. And he also said if we're under 6,900, the heads up for a big down move. So we're still under 6,900 SPX. So keep an eye on that. That is, let's see, the difference in futures is, so 6,900 SPX is 69.32 in, so there's about a 32-point difference in the futures. So as long as we're below there, heads up to the downside. Remember what I said about these tails, thesis-wise, the next tail break is probably going to be the bigger move, right? I mean, that's quite a ways away, but there's not a lot here. I can definitely see that happening, and if it gets above those, obviously we can see that happening because it happens every single day. We make new highs. So, all right, that's all I got. Pretty dead. I do this every day in my trade room. Again, if you come in there, please participate, is all I'm asking. All right, have a good weekend. I'll see you guys next week.